Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome, my name is Lars Fontin. Today is a new episode of Cycles TV. I'm happy to have you here today. I needed to pre-record this session today, so we have today Sunday and it will be streamed tomorrow on Monday. So thanks for joining me today. I will give you a short update today on current market cycles in the S&P 500, and we will review the tech sector with using Apple as a proxy. And at the end, I will show you again how to fine-tune technical indicators based on cycles. So let's directly jump in today. What you see on this screen is the S&P 500 with latest data. We've seen the current turn here, latest, and down below is the actual spectrum plot from the S&P 500. Basic procedure, I'm sure you're aware of how to read a spectrum. The most prominent cycle, which at least visually stands up in the spectrum, I explained last week how to interpret a spectrum, is this one here. So it's a long cycle with a length of 283 trading days. You see it's listed here. So 283 trading days. The bar-tail score is great. The strength score is not the best, but at least the amplitude is quite above all the other cycles which then follow. So this is the long-term cycle, which is quite interesting. And maybe you're aware of my blog where I highlighted the cycle here 1 or 2 weeks ago, because the interesting point of this cycle here, it's currently, it rolled over by mid-February. So now the downturn of this longer term cycle has started, which pulls then down into August this year. I mean, we just have a very short period of data for the last 3 years using this cycle. So we need to put additional measures into place. So let's see what this cycle will show us later. So then a second cycle, if we want to add shorter term cycles, based on the rules I've outlined last week, is this one here, which really shows up. It's the strongest cycle. You see it's on top of the list, which means it has a highest strength score. It's also a very large triangle here. And you see based on the visual representation of this peak here in the spectrum. So it's a very sharp and clear peak to the left, to the right, with an amplitude separating from the ones to the left and the right. The bar-tail score is blue, which means is so la, but still okay. So we have a cycle with a length of 82 trading days. This is a short-term cycle, which I would then recommend to add to the mix. Yeah, and this is how it looks like just picking these two cycles. So, and the big question is, and that's then mid-March, and that's the same reference I want to make if you have reviewed the video I did on Apple some time ago here, that the original top was projected by the earlier cycles for March. So as markets have topped now, we need to switch to technical analysis to fine-tune this analysis and then look into the future even further. But what you can see here, and please just look at the background color of these two cycles here on top. I've selected these two cycles now as these are clearly the key cycles in this market right now. The background color shows you where we are in the phase of this current cycle. So the longer term cycle is currently in the topping period. This means it's orange with the red dot on the right. So this one is around to top, and this is still in an upswing, which is then representing this cycle and here. And while we hover over the time axis, you see that latest by mid-March, both cycles roll over to the negative territory, which will give then no positive implications for the cycles throughout April and May. Yeah, so we are now around the corner where both dominant key cycles will turn negative. So there's no positive sign based on cycles, just looking at the S&P. So let's now try to confirm this forecast based on other data. So therefore, first I will switch to the tech sector. So therefore, using Apple as a proxy, I'm doing this here for a long time now on this channel. Therefore, let's switch to Apple now. And this is the original forecast. By the way, these 3 cycles here, this was the forecast I showed you throughout the whole last year, yeah, with showing the bottom here in early January. So we have now made a huge move upwards. And this was the original projection I did here in the live session, a month ago, end of January. Now, where I showed you that same here, mid-March, these cycles in Apple turn negative again. So that was the forecast we made. And it looks like as we are now here, so we are in the topping period of this cycle now. So if it is a slight left translation, then maybe we have seen the peak already here, or at least there are 2 weeks to go, maybe some sideways volatility in this cycle. But then again, after that point in time, also this composite model based on these 4 cycles here. So this cycle is picked 322 days. This cycle has been picked 178, 138, and here 82. And that's the very interesting point I want to make. So you see the same cycle length here, 82, which is clearly the most dominant cycle in Apple, standing out visually in the spectrum and even having a green, very huge triangle here. And that's the same cycle we've seen on the S&P here, right? So here is the same cycle seen on the S&P, and you can then also just switch to the shorter cycle period here. So we are approaching the topping window here for this cycle. So next 2 weeks might be interesting, but then again, this short-term cycle will roll over. And same for Apple here. So that's not only the short-term cycle, also the composite. So now let's update and see if this composite model changes if we use the latest data for our projection here. So I will update the in-sample period. I will now recalculate the cycles data. And these are the cycles which are still there. So 2 out of the 4 cycles we have seen are still there, but the projection is again quite the same. So, and we have the same projection now for the S&P and Apple using as a proxy for the tech sector. So here you see the 138 and the 82 cycle. We could also add this one here. I mean, maybe based on the criteria I outlined in last session, this is not a real good peak here. It's a very plateau. The down move to the left and the right is not really sharp. So, yeah. But in the end, and that's the test I often do, you can add it or remove it from the composite or add it to the composite, and you will see that the key turning points do even not change. So you should have a look at this area here and this area here, because these are the points in time we are anyhow interested, to see a peak and a bottom here. So by just marking them and now checking if these, by deselecting this cycle, if the windows change, they don't change. So it doesn't matter if you put this long-term cycle into the mix, because the next turning points are still here and here. So the timing is not changing. So that's kind of confirmation. Even if the peak is not the same, it anyhow does not matter in regards to the projection we are interested in. Oops. Let's clear that up here. But even then, afterwards, there's no positive sign throughout April and May. And as said, now here again, we have the 80-day cycle. Maybe we have topped already, but to confirm this, we need to move to a technical price analysis and not just analyzing time. But last but not least, I often like also to have a confirmation from kind of sentiment data set. And a possible data set in sentiment I like is the volatility index, the VIX index. That's the current data on the volatility index here. You see quite huge possible peaks, which could be selected from this spectrum. So therefore, I would refer you to my more or less teaching session last week, how to pick cycles of this kind of spectrum. The one I would like to pick here is this one here, because you see here we have, let's start first with the longer term cycle. So here, so I need to draw something. So here we have too much possible cycles, and they are not clearly separated. So the sharpness is not really good. So it's just popping up here. To have a sharp view, I would like to see it moving down the side of the cycle here, but they don't. So I don't like the shape of these cycles here, and also the amplitude is more or less the same. They are all on the same level. So there's really no real decision-making process. You need to do some long-term analysis. So that's maybe a good point, just from a learning perspective. If you see this kind of here, you can't just pick one just based on of this visual representation. You need to do a long-term analysis to see which of these cycles peaks might be valid from a long-term perspective. But the cycle which could be used is this one here, because here you see a very, very clear separation. And if you look the amplitude, there is nothing to the left and to the right of this cycle here. So this is a nice peak from a visual representation. And we have here a green triangle, high Bartle score, and a large triangle. So you see it's on the second row in the table view. So very good strength. And last but not least, it's 73 trading days, so quite similar to the 80 days cycle we've seen on the S&P and Apple. So I have also confirmation from the two other assets that this cycle is visible there. So based on the volatility index, and that's now interesting. It looks like these cycles top now, or bottom now, so which means a top in the markets, a bottom in the volatility, often is representing a top in the stock markets. So this could be a top here. And you see here, the top is coming more early. So this gives us already the possible information that by just looking at the cycle top here mid-March, the sentiment suggests that this bottom could be even more early in. So maybe already now. So, and the sentiment is now moving upwards, which is now more or less already now the possible projection of a down move in the stock markets here. So the VIX index shows us cycles might on the stock market top more early than the mid-March projection. We have seen a short down move already in price. So now last but not least in your analysis, cycles give you timing information, but to get confirmation or even fine-tune really the entry and exit, you don't trade time, you trade price. So therefore you need to go to the price action in whatever technical analysis platform you like or prefer. So here I've just loaded Apple chart here on top. So while we have the Apple cycles here, I'm just moving to an Apple chart here. And the key now is, and let's start with this one here, because this applies to any technical indicator you use. You know, the problem with technical indicators, and I repeat this here often on this channel, it doesn't matter which technical indicator you pick. The quality of the entry and exit signals you get from an indicator always depends on the parameters you set it to. And to be honest, nobody tells you how to set the parameters. So technical indicators are worthless if you don't know how to configure the right parameters. And that's now where cycles come into play. So cycles give you exactly the information which is required to set whatever technical indicator to the best parameters, length parameters for the calculation, so that they give you the best visual representation of possible signals based on the tuning. So you avoid whipsaw signals from these indicators, which will ruin every trading system based on these indicators. So in this case, and that's why I recommend most of the time, I've set this is a simple stochastic RSI indicator, so really standard technical indicator. And I've set the RSI length to 80 because we know that 80 days is the most dominant cycle on the S&P, so 82 on the S&P. On Apple, it was also 82, I think exactly the same. And on the VIX, it was 70 something. So all three showed me the cycle lengths. I also often recommend using half of the length, but I'm using half of the length for the stochastic length and the full length for the RSI. So you can play with the harmonics of the cycle length. But these parameters are derived based on cycle analysis. And once you have configured your technical indicator that way, you will clearly see very, very soon that the indicators you get from from your technical indicator. So here we have the sell signal. Here we have the buy signal, which is here. Here we had a sell signal, which is here. Here we had one clear buy signal here. Let's start with the historical analysis. So here you had two buy signals. Somewhere here. Here you have the clear sell signal, that point in time here. So then, here you have the buy, and I mean, you know how it goes. Here you have the sell, and really, you don't see any whipsaw signals, right? So here's then the buy signals. So I will stop here. So by just using this information now and giving it here, if you just use this information and just connect it now, just based on the indicator readings of this indicator, you see how much more value you get out of this indicator, right? So now the important point is why I bring this to your visibility is, here's the current reading. So we have currently a sell signal on Apple based on this technical indicator. I mean, I just showed very simplified here. Yeah, we don't give any recommendation. This is pure education, how to use cycles. And this is just showing you an example how fine-tuning these indicators based on cycle length information gives you more information. So the reason I pulled this up, so from a technical point, we have seen here that we are in this oversold territory. We have now crossed above the upper line. So from a technical price movement, so it looks like the price which has been traveled here to the upside is now enough, to trigger from a technical point of view, using the cyclic length information now, the sell signal, because we have traveled already, just looking at price, very strong move, and that's exactly the low here in January, which has shown up here by our cycle analysis, exactly at the same point here. So even though from a timing perspective, we might based on this theoretical cycle, continue now for the next 2 weeks. Same here in the S&P, using the shorter one. The longer one, here, this one has rolled over already, so just using the longer one. So it shows us we have topped already. And using the volatility index, which is bottoming now, indicating a top now. In addition, with the technical signal now we have here, so I would not expect a big up move now until mid-March. It looks like the top might be in. Cycles are now rolling over here for the whole summer period, so it does not look very comfortable going into the summer period based on the cycles. So that's it. That's what I wanted you to show today, so at least you get an update. Please repeat the analysis with our cycle scanner. The tools I'm showing you here are available for all members of the foundation. So if you just view this, become a member of the foundation, you can use the same tools which I'm showing you here on the channel. And this is pure education. So I hope you get some interesting views now you can digest during the week. Next week, Monday, I will be live here again. So thanks for watching me today and have a nice week. Bye.